Happy Friday to you all, and welcome again to the smorgasbord of fintech news. All of us here at Stable refer to as the Payments Paddock. I'm your host, Craig Agata, and joining me in the not-so-rotating second chair is Stable's perennial spokesman and social media hype guy, Managing Director, Alistair Hesketh-Hudson. Al, how has the week been for you? What have you been up to?
The week has been good. Another heading into another bank holiday. Short weekends. Spoken to lots of interesting customers across lending and cards actually this week. Spoken to quite a few people that are looking to restructure how they manage expenses across the business, and everyone's been in a position where they've had work expenses. You'll either have a really good system or you won't. I don't think there's any middle ground. So definitely with inflationary pressures, it's a key theme for finance teams and business owners at the moment to look at where, if we're going to cut costs or control costs, where do we start? And expenses is 100% an easy area to control with the right systems.
There's a couple of things there, isn't there? Is the notion that you're either fully automated, fully integrated, or you're still doing things on spreadsheets and manually reconciling, corporate card transactions, once a month. Or the other side of it as well on the commercial side, it's, can you use your expense management solution to essentially be a bit of a lever for, saving money and keeping costs down, because corporate cards are expensive with the main banks usually. It's very, very expensive. So I'm not surprised that lots of your clients are talking about looking at alternative solutions, because there's lots of stuff that we use. Even the one that we use internally is brilliant, isn't it? It's outstanding.
We talked about integrations previously, and there was a really good post on LinkedIn about someone saying how effective the Trainline app is, and it's one of their most used apps for personal and business travel.
Yeah,
which I agree with. I think it's a great app. But on there's an integration into SAP Concur and another expense management system, but they need more, because from a data feed perspective, if I book train travel or whatever it is, to have it feed the receipt and the merchant category codes across to the expense management or spend management platform, that's a great feature. So I'm surprised they've only two.
Yeah, and I think even a lot of them, including our one, it actually dips into our emails to find receipts that we might not have even tagged against transactions, and quick actions from the menu. Actually, we might as well say, shout out to Moss, because Moss's platform is very, very neat, and we've been quite impressed by it, and I think some of the clients that we've discussed have also found them quite interesting as well. So, but there's others are available, and others are equally good in different ways, and in some in the same way. So it's definitely worth a conversation with us, and we can give you the lowdown on how to navigate that space.
All right, first article. So we've talked about Bitcoin a couple of times. I feel like this is the Bank of England sweating a little bit and going, right, okay, everyone's talking about 24/7 delivery of payments. How about we put a rocket under CHAPS and make it go 24 hours a day, 7 days a week. So it's definitely a good thing. I think CHAPS is for us anyway in the payment space, has always been the backbone of
it's the default payments, isn't it? Yeah,
it's the
pretty
default,
much.
Yeah. When I started working at World First, Bax was there, but it just it felt aged and it was slow, and CHAPS was kind of there, but it's not cheap. It's an expensive payment method. Got to remember that as well. But this is a really interesting step taken by Bank of England. So they're opening up a consultation to phase an approach on how they would, phase a conversation, how they would approach it, who would be the main benefactors for it. I know in the legal space, people completing on properties can be.
I was going to say, anybody that's bought or sold their house, it's the bane of their existence, right? Having to pay for that CHAPS payment, with their conveyancer or whoever it is that's sort of handling the sale for them, and then also like even though it's supposed to be as close to real time as you get, the faster, more guaranteed payment method, there's still, that squeaky bum time of it, if it is outside of hours, close to hours, cut-off times, is it going to go through, it is essentially a bit of a weak link in that entire process, isn't it?
Yeah, yeah. I think anyone completing on a property that is doing it late in the evening or potentially before work, this would be a great tool.
Or
Because
a bank holiday even, we've got a bank holiday coming up, and I imagine there'll be some house purchasers or at the moment that are sweating profusely to get it all done before the close of business today. So
yeah, yeah, absolutely. And obviously, faster payments is a fantastic product. It's built on a different set of rails and rules. It mentions in the headline here that CHAPS is the high value payment system. So faster payments are generally capped.
yeah.
I'll need to double check. I think it's up to 1 million. Maybe um, that may be fake news. I'm not sure we can check. I don't know if you can check that. Craig, on your side.
That's it.
Um,
We'll have to do a corrections section of the podcast from now on forward, because I think I've said a few things that are probably dangerously close to being inaccurate that we're expecting, hopefully, listeners to be more informed and pick us up on. So,
yeah,
I mean, as we've said before, treat everything we say as our opinion only and not representative of, our company or the uh, it to be. Don't take us necessarily for our word for it. Go and do your own research as well. But yeah, I think you're absolutely right, though. It is a very high cap. I think I don't know if it's done at a per bank level or if it's a universal one, actually. I mean, I'd love to say that I've had personal experience of hitting that cap, but usually it's been in the context of helping our clients navigate it, and we've never really had any issues with the faster payment side of things.
yeah.
But yeah.
Cool. We'll come back to that when they've done the consultation. It'd be interesting to see what their timeline.
So they say they're moving it towards 24/7 operation. What was really interesting when I kind of browsed the article is that they actually said they were looking at 22x6. So it's one of those where it does feel a little bit reactionary from the Bank of England in response to, as you said, like all of these other payment methods, payment rails, and so on, to them suddenly say, "Oh gosh, we better bring this into the 21st century a bit more fully, lest it be rendered obsolete or be superseded, maybe by some of the non-traditional banking rails, payment methods and providers." It does feel like a little bit of a play to stay relevant, and
Yeah,
we'll see how that pans out. I imagine that consultation will be received very favourably, and that it's a bit of a fait accompli, really, in terms of why would we not do this in this day and age. And I don't understand the reasons why we wouldn't do it, unless it puts an undue burden or strain on the providers, on the banks, that are going to have to honour it, essentially, from a
hmm
service and operational perspective.
yeah, yeah. We'll see. We'll come back to it in a few months. See how the progress is getting on. A
In
familiar face.
another payment rails news, an excuse to get Trump on the on the podcast again.
Yeah.
Yeah.
So this
So what's this headline say, Al?
similar. Similar vein around central bank, but across the pond in America. the the financial the financial intermediary space or non-bank providers, of which there are many, are heavily reliant on utilizing other banks for their services. So effectively what you get is you have a foundational layer where you have usually tier one banks mixed in with some smaller specialist banks who provide liquidity and balance sheet and some controls and parameters to various financial institutions. But those financial institutions are the ones that are the front or the coalface of the customer journey and engagement. And that's kind of how it's always been. The banks have tried over the years, and there's many examples of banks launching Revolut-like products that after 2-3 years go to die on a shelf somewhere. They
Yeah.
just can't move quickly enough. But a
It's a
fintech
cultural
business,
thing, really, isn't it? I think it's
yeah,
it's it's a cultural thing, as well as the legacy tech stack in which they're kind of beholden to as well. It's one of these things that they kind of carve it off, put it in a different building, a different office, have, from a cultural perspective, try to embrace more the fintech side of things.
Mm.
But then it all kind of they still need to be beholden to the mothership, essentially. And as part of that, that's usually the anchor that drags along the ocean floor and sinks them eventually, isn't it?
Yeah, yeah, exactly. And so as a result, this article is effectively highlighting that Trump has asked the Fed to give better access or explore how better access could be given to these fintech providers, so they don't always have to go through a traditional banking route. uh, because going through the banking route is slow, it's expensive, it can definitely hamper growth, and it just creates a bit of a monopoly where you want to launch a payment business or a mortgage business or a lending business, and you need to go and find a bank to sponsor you and become a customer. So it's a really good thing, and I like to think that mentality will, if it's successful, seep across to the UK and Europe as well, and maybe change the dynamics of how these fintech and payment businesses are able to access the tech they need to grow, and more importantly, provide the underlying customers with things that maybe are new and different and have different value propositions. So it's a really good article, and I know Trump is very pro. He's very pro business. So anything to remove red tape and blocks, particularly if it involves the Fed, he'll give them the green light to go
I,
ahead and explore it. Whether or not it actually turns into anything um, in real terms is open to question, but it's definitely the right narrative to push.
I think it's also a timing thing, right? Because we've got the confirmation now, the new the new head of the Federal Reserve, Kevin Walsh, who is very much Trump's pick. And I think he's probably one of these things where he's now that with Jerome Powell and so on, being sidelined and very much maligned by the administration and by President Trump specifically. Like, I think this is definitely a move towards it's very on brand for President Trump,
Mhm.
isn't it? In terms of he's been very pro crypto. I think when we're talking about opening up payment rails, I think it would be I think Kraken, the crypto exchange was specifically cited,
Yeah,
and
yeah, I mentioned
I
the
think really
Kraken.
this is one of those movements towards, okay, what can we do to bolster and strengthen crypto
Mm.
specifically? I think the fact that they say that it's to other fintechs, I think the assumption now is that when we talk about fintech, everything is crypto adjacent. So I would expect that the first movers on this would be them, because I think, based on what we've said in prior episodes and so on, the tier one banks relationship, if they are the gateway for crypto exchanges into the traditional payment rails and to the Federal Reserve's Fed Now and all of the ACH piece and so on, that removes that obstacle, right? If you've now got direct access, um, and essentially it kind of removes a lot of the things that were cited by the banks as being sort of adding to their um, the overall level of risk that they were bringing into their books. I imagine they'll be quite relieved, maybe, or either that, or they'll be disappointed in that what might have been quite a lucrative line of business is may now start bypassing them, or taking some services that they were getting from them and going, integrating and straight with the Fed. So, um,
Yeah.
yeah.
Well, Kevin Walsh is going to be busy, right? There's a lot. I think if I could, the opposite of envy for someone starting a new gig, unless you really, unless
Schadenfreude,
you,
isn't it? It's sort of, oh, good luck, mate. This
unless
is
you
this
really
is gonna
like a
be a tough
challenge.
one. Yeah,
You're inheriting a really difficult split um, in mentality and voting history for rate hikes and rate cuts.
yeah,
You've got the economy in a in a bizarre spot, right? There's been a massive period of record earnings for US companies. US indexes are about, it looks like, I'm looking at the chart now, the Nasdaq and S&P are not far off making all-time highs again. And at the same time, you've also got this whale in the room of zero real resolution between the Strait of Hormuz opening, lots of talk and lots of chatter, and then a load of backtracking. So it's gonna be interesting. And on top of that, there's going to be loads of pressure, as you've said, from Trump to reduce friction for business owners and fintechs to go out and grow their business. So
Well,
yeah.
let's just hope he's not got any skeletons in his closet, like massively over budget renovations of, public buildings or fraudulent mortgage applications. I would
Yeah.
imagine that they've done, their due diligence, hopefully, but anything that could be weaponized against him by the administration if he doesn't start singing the same tune. But at the moment, there's no signs of that. Hopefully, he's a skilled diplomat and able to navigate, as you said, a very, very challenging time, both now and undoubtedly in the years ahead for central banks, especially in America.
I suppose from a relative perspective to the UK, this concept would be it would be like Keir Starmer talking to Andrew Bailey and saying to him, can you reduce, or can you help out the payment business? But actually, in reality, the way everything's structured in the UK, although the Bank of England plays a significant part from an operational fintech perspective, I don't know how involved they are. So, for example, companies that we've worked at in the payment space, the likes of Barclays, Citibank, they have been the predominant providers of both underlying tech and also all the plumbing. So being able to generate an account for a customer that sits with a bank, and therefore it's safeguarded under a different set of rules than a normal bank account. But that would be like a fintech business starting up and going direct to Andrew Bailey and saying, "Hey, we need more products and more rails." To which I can't see that working in the UK. I can see them trying to help the red tape, which is more with the FCA than anyone else, the Financial Conduct Authority, who give a very clear set of guidelines and rules on how a payment business goes to achieve their regulation, what type of regulation they achieve, and then beyond that, the relationships with the underlying banking partners is kind of, as we've seen in the past, we mentioned it before, it's kind of left up to them. We've had payment businesses disappear overnight due to what looks like incredible mismanagement of money, and the FCA have kind of taken a step back and gone, well, if Barclays is meant to be safeguarding, then that's on them. Like, we can't check that they're doing it. If Barclays have got accounts for you, then they should have safeguarding parameters that allow them to go, okay, this payment business is operating outside a parameter, therefore we have a risk. It's not the Bank of England's job to get involved in that. So maybe it's just a very beneficial thing for the US financial services space, which
I think so. Yeah. I think also the ACH piece, the notion of instant payments via bank, that's really, only that has lagged a lot of the rest of the world, especially in the UK and Europe, compared to what is available in the US. And even if you look at the number of checks that are still in circulation in the US in terms of personal and business payments, compared to I think it's something like 0.1% of transactions now in the UK are via paper check and things like that. I think it's because it's such a fragmented system in America. Every state has a different regulation. You see it in the array of community banks and other institutions that is kind of are very regional in the US. But it's actually, just going back to the point you were saying around PSPs having direct access. I think what you've just said is borne out in terms of how few PSP or your payment companies have direct access to the faster payment system, for example, and a lot of them are still going through those banks. So the fact, as you said, that those big banks are essentially the main arbiters of who can and will get access, and in terms of the risk, it's kind of managed by them. I think it does dilute the systemic risk in allowing direct participants in some of these payment rails. But also it does slow things down and makes essentially starting a payments business harder, for better or worse. Like, I think, some friction is a good thing. What we don't want is for a very fragment, an even more fragmented landscape that we have at the moment, where you have providers that are so small and so insignificant that it isn't viable. It doesn't make economic sense for so many businesses to be in that market. So yeah, it's really. I think it's a good thing. It's also interesting in terms of, will this aid UK businesses and I guess payment companies themselves in accessing the US, because that's often still a very big challenge, particularly for businesses like, even thinking about Revolut, for example, or Wise, or, all of these businesses. They want to crack the States, and they see the States as being, an amazing, market in terms of the size, in terms of the average disposable income, and what, in terms of the overall sort of economic and business opportunities. But it is often held back by the fact that they can't get the right relationships, they can't get the right access to banks, or they have to piggyback on smaller banks that might be a little bit more open to taking on the risk of having a payment services company come to them to use their rails or use their infrastructure. So it is going to be really interesting if it smooths the way there for that geographic expansion, I think. Because I mean, we've experienced it. You and I have had direct experience, haven't we, of kind of flirting with the US markets, and it's a tough ask. It's a tough nut to crack, and I don't think anybody's done it yet.
It's you mentioned it earlier, the the there's a massive gap in the technology, and if you focus on the tech and not on the underlying customer, you end up providing a load of things that are redundant. So you can have all the best account technology and transfer technology, but if you're dealing with a customer that needs to move money and their community bank doesn't facilitate that type of transfer, then there's not a lot they can do. That was a big thing in the private client market. You'd have a client in the UK that either had a property in America that they were selling, or you had an expat that had moved from the US to the UK, and they were using us to help transfer the money back. And they would then speak to their bank, because online banking wasn't even a thing 5-6 years ago. Speak to the bank and say, I need to move $500,000 from my community bank to a Citibank account located in New York. Sounds easy enough. Okay, sir or madam, you just need to come over to one of the local branches and sign this paperwork.
Yeah, that's a big thing, isn't it? Yeah.
They were like, why does it have a UK address on the correspondent address? We don't do international payments. It's like, no, you're not. That's the beauty. You're not doing an international payment. As we've provided you with a routing number and an account number for a bank account in New York. Forget the UK address. So you can have all the tech, but if the underlying customer can't access that or mirror that level of technology on their bank, then it's hopeless.
It's just so US. I mean, understandably, with a domestic market that size, but the players within it only really see as far as up to the US borders in terms of what's possible and what's available. So even talking about currency and FX and things like that, it's still excuse the pun, but it's a foreign concept still to businesses, and crucially their banks in America to a large extent. And so there are a lot of small, medium-sized US businesses that are probably leaving opportunities unrealized, where they are being led by their bank manager or by whoever they're seeing at the the bank teller when they pop into these branches as what's possible. There were a lot of clients that would walk out of that bank and call us and say, can't do it. The bank says it's not possible, and we essentially had to then, as you said, coach them into this. This is how to, not to coerce them, but to say, look, no, it is possible, and you need to explain this to the bank teller or speak to the manager and explain why it's possible, and we can give you, the information to be able to support that. So, yeah. So this is a different world. The idea of fintechs being given direct access to the rails is quite a leap above that. Excellent. So I guess we're bringing on to the third story, the bookend to this podcast. Al, what have we
This
got?
was actually a community blog post, but I thought it was brilliant.
Oh, lovely.
So it's not a specific article, but it's something we've talked about already.
Bit of an ed-op. Yeah. Okay.
Yeah. But effectively, this is highlighting, again, coming back to the whole on-brand piece, particularly luxury brands are figuring out ways that they can create better financial experiences. And quite often that might involve a digital asset. It might involve a loyalty card or a cashback scheme. There might even be a digital wallet or a bank behind it. But this is highlighting the fact that there's often a massive mismatch in expectations between what that brand is trying to achieve from a customer experience perspective versus what's possible in the real world of payment flows and service providers and risk appetite. So they've referenced in here, customer browsing a £3,000 item expects continuity. They mentioned Gucci, so someone buying a really expensive piece of clothing or jewelry and then trying to use a crypto checkout that then takes them off on a different journey and completely fragments their whole experience is a really poor way to try and bring together some of the latest technology. And it almost seems like a bit of a, if we don't do it, we're missing out. But this article is really good. We'll put the links in the YouTube description afterwards.
Yeah, it's really, I think this also highlights especially from a direct to consumer perspective, where you've got products, units, SKUs that you're selling that are in the 4 figures, 5 figures even. How many shoppers are going to come in and produce a Visa or MasterCard debit or credit card that is going to be sufficient to cover the cost of that transaction? So these high value transactions, they need a dedicated a lot of thought. You can't just throw in a hosted checkout page that just handles the major, card types. Is very much.
It summarizes it there. If checkout redirects to an unfamiliar page or requires re-entering details, it's gone.
It's just gone. You're dead, especially amongst that clientele. Yeah.
I remember I actually posted it on LinkedIn a few months ago. We were there was a kids clothing brand and they were doing a sale, and they're quite well known in the UK. And
don't name and shame them. I feel sorry for them already.
I tried to book it on my phone, and the checkout experience was just ghastly. And for such a big name, I was kind of shocked. I actually was so shocked. I thought maybe I was on like a phishing website or a clone.
Oh, really? You'd been hijacked or something, redirected to a dodgy page. Yeah.
But no, it just turns out it's really poor. And it asked me to input my card details manually on my phone. And I just didn't do it, and they didn't get our business. So
yeah, I think that's the thing, isn't it? Is that it needs to, every single facet of that process needs to be absolutely dripping in trust. And as you said, like any sort of manual duplication, even things like entering addresses and things like that, it's a non-starter. Like, and I can see that's why we talked about in the last episode around the investigation into wallets and so on. We were talking about PayPal specifically. I can see, I mean, PayPal might not necessarily scream high-end, retail to you, but I can see there being benefit there for those brands where they go, well, if they're just going to log in via a PayPal via PayPal, and they don't have to re-enter their credit cards again, and they're all there, that is worth the premium that they'll be paying as a merchant to process it through PayPal. Especially when you think about the margin that you'd expect on these high value items, there's enough there that if you're having to split you're paying the merchant processing fees, through the nose. It actually, in the scheme of things, if it means that you save the scale, you offset that in terms of completed checkouts, then it's a price worth paying, and it's that opportunity cost, really. Also, when I think about luxury retail, as I was saying around the cards and alternative payment methods, I mean, this is also where the account to account stuff, the open banking payment authorization piece is pretty critical as well for retailers. And we talk to a lot of clients that, particularly in the travel sector, where but also others, some educational providers who run educational courses and so on. So these are high value items, and in reality, as I've said, credit cards, debit cards aren't always feasible. They would otherwise send out an invoice with bank details to be paid, but then you then run into issues when it comes to collections. So having an account to account provider is critical in this day and age, even if it's as a contingency, but just having that as an option is really crucial. And I guess the other aspect of that as well is that I've noticed recently some merchants allow recurring or essentially indefinite authorization of a particular retailer. So if you have, it was actually specifically when I was topping up my Revolut account. So I was trying to do it by card, and they said, "Oh, actually, you can, authorize it via your bank." So I personally bank with Barclays, so pointed me to the Barclays app. The Barclays app then asked me, "Do you want to set this, not just do you want to save this payee, which is quite a common thing, but do you want to give this merchant, as they were referring to Revolut, perpetual access to account, so you don't have to authorize in app moving forward?" So I thought that's an interesting development in that journey, where previously it would redirect into a banking app. And as you said, like kind of that context switching takes people out of, I'm excited about buying something, and suddenly into the cold reality of, oh my goodness, I'm paying for something out of my bank account, and look at my account balance, and oh gosh, it's a lot of money, or whatever it is. It actually then would just, you would, every subsequent purchase, because you've already authorized it, it doesn't redirect you into your app to do, that 2FA, biometrics piece. So I thought that was quite interesting, and I wonder how that will evolve over time. But I feel like that's a perfect fit, really, for what you would expect in terms of loyalty and repeat custom for luxury brands.
Yeah, I think also really important for if someone's listening to this or watching it who's a business owner or a finance leader, to make sure that this stuff is being tested. So I actually felt like messaging that clothing company to say to them, I'm not sending this to be facetious. I'm just letting you know that I'm not buying from you at this point in time, because the checkout experience is so poor on a mobile and so manual. I was like, I would recommend that someone in the company tests it using their own mobile and just feel what the customer feels, because it's very easy with a million other things to worry about. To actually go and test this stuff and go, is this a smooth experience? Are we optimized? And are we accommodating for mobile purchases, which must make up a significant number, because most of their advertising is done through Instagram, which is accessed through the phone. So, just I thought it was quite interesting. It's the same as if you've watched any of the American sales trainers, it's the ones that specializes in gym owners and car dealership owners. They'll take the owners away on a weekend workshop where they're coaching them and providing them with tips and tools to go and build their business around sales and closing. And then what they'll do on the last day is they'll ring their dealer, or they'll ring the dealers or the gyms live in front of everyone and speak to the front of house or whoever's answering it. And you would be shocked at the various degrees of success they have.
Oh gosh, it's like that sounds like an owner, director boot camp mixed with a healthy dose
really
of
good
mystery shopping in the mix as well. That is fascinating, isn't it? Is that I think we all need to, as if you're listening to this podcast, hopefully you're curious enough about your own business or you're in your own role to constantly be testing and checking that the as you say, the front of house, the public facing aspects of your business are measuring up to what you are discussing internally and what you are telling people, essentially, because it's amazing how many people kind of get inside their own heads and live in a bit of a bubble, or don't have time necessarily to constantly check this stuff. And yeah, as you say, like that, I bet I'm actually quite keen to watch some of those videos, because I bet it's almost like, shock TV or whatever, watching, the car crashes of, in customer service and sales that occur when they pull those.
There's a great
those two.
one where he rings up and it's a luxury gym, and he says, "What is the most amount of money I can pay you every month?" Okay, quite an unusual question, I imagine, for someone who's in charge of memberships to get. But this guy was portraying himself as a high net worth individual. He said he's fell out with his old gym. He's looking for all these services and provisions. So he made it very clear, and he just said,
What's the best of the best? Yeah. Okay.
What's the most amount I can pay? Just and the person just collapsed on the phone, as if like they were, and they were able to, you could see the business owner in the crowd just sinking into a seat, because they're playing this on the iPhone on a speaker projected across the whole room. But he was at that course because he felt like his team weren't good enough at closing business, just like that company was losing sales because their checkout capability wasn't good enough. So it's it's all the same. The one provider to mention that's tried to tackle this is Klarna. So rather than going down the digital asset route or crypto route, they've just gone to retailers and said, if your average item is above a certain threshold, I'll use bikes, for example. You want to go and buy a new road bike or a mountain bike, then you might go, you're almost certainly going to go into the shop to try it on, or try it and check out the frame size and chat to the guys in there who know about it. The checkout bit can be a bit tricky, because you're either going to put it on a credit card, because it could be $3-4 grand. But Klarna they've attacked the stores and given them a QR code on the desk, the checkout. So the sales, and then they've trained the salespeople to say to them, if price is an objection, then we already have a Klarna checkout function here in the shop. Because if they go home to check it out, there's the risk that them searching for a specialized road bike, they're going to get loads of other ads from other retailers who might have 0% credit. So the sales guys are trained to tackle that objection head on.
Handle it in the store and not,
and then they just scan it. And as long as you've got a Klarna account, which most people do, and if you don't, it will ask you to sign up for a minimized account. But there and then you can link it back to your actual debit card and set up 12 months of payments there and then. It's just really good checkout experience for people, because as soon as you give someone the choice of going home to think about it, there's a very high chance that they'll end up getting buyer's remorse and bailing on the plan. So I really like that. In fact, we'll probably, maybe next episode we'll cover that more specifically, because Klarna have got some great industry leading products, but also just their mindset to tackling these kind of problems.
Yeah, they run some really interesting, sort of research and surveys as well. So yeah, that's a great shout, and I guess a good segue for us to say, join us in a couple of weeks' time. As we've said before, it's a fortnightly edition of the Payments Paddock. This is episode 3. I should have said that right at the top of the show, but we're on our third installment now, and we're looking forward to the fourth. And we're looking forward to everybody joining us for it. Please do bear Stable in mind if you have any questions, thoughts, anything that we've discussed today. We always love just an informal chat about anything that takes your interest, that you have questions about. We won't necessarily know the answers. Even if we do think we know the answers, as we've established at the top of the show, we might have to fact check them. But one thing is certain, we're definitely well equipped to help signpost you around to the people that would know the right answers and be able to help you. So do check us out at stablepayments.co.uk. If you have any questions or feedback about the episode specifically, drop them to info@stablepayments.co.uk. Al and I will pick those up, and we'll get back to you. And also, if anybody wants to join us on the show at any point, please pop us an email. We'd love to host some guests from time to time, because as much as Al and I like talking to each other, we literally only talk to each other once a week on this podcast. So that's why I'm always asking him what he's doing. So it'd be nice to have another guest in the rotating third chair that we can inquire and interrogate each week. So do let us know. I guess that's it. Al, that's a wrap. So have a great fortnight. Thank you very much, everyone.
I can hear a police helicopter hovering closely overhead.
Yeah, you got to go then.
It's a good it's a good time to bail off before the microphone picks up the noise. But yeah, thanks everyone. We'll see you in a few weeks.
Brilliant. Thank you.